Now, this is a typical scenario where the issue of debentures is oversubscribed. Typically, allotment is made differently for different sets of debenture applicants, obviously based on some sound rationale having an equitable basis. 1800 debentures accepted in full, that's fine. 200 debentures rejected. Obviously, the corresponding application money will have to be refunded immediately. Now let's look at this set of debenture applicants. 400 applications were allotted 200 debentures. This is a case of prorata allotment, wherein a lesser number of debentures were issued or allotted against the actual applications. Do we refund the excess application money? We did that in the case where consideration was received in lump sum, as we have seen in the previous segment. In this case, where the money or consideration is received in installments, it makes sense to hold on to that excess, because this excess can then be set off against the allotment money when it becomes due. There are 4 stages in this illustration: application, allotment, first call, final call. Notice the first call is a stage by itself and separate from the final call. The first stage, application. The first event, receipt of application money. The first journal entry will be to record that event, that is, to debit the bank and credit debenture application account with all of the application money received. The next event is the immediate closure of the temporary account by transfer to appropriate accounts, as we will now see. The primary transfer will be to the debenture account. The other obvious transfer will be to the bank to refund the excess application money of that set of applications that were fully rejected. Now, in the other set, that is in the one that was partially rejected or where prorata allotment was adopted, there is excess application money that is being retained by the company to be used later to set off against the allotment money when it becomes due. This amount, rupees 200 into 200 debentures equaling to rupees 4,000, is then transferred to the debenture allotment account. The next stage is the allotment stage, the event being the allotment date. From here on, the entries are standard and repetitive, meaning to say that on the due date, the debenture account is booked or credited by debiting to a temporary account. In this case, the debenture allotment account. The temporary account is then closed when monies are received against it. In the allotment stage, notice that the amount collected is only rupees 36,000. This is because of the excess money that resulted from prorata allotment at the application stage. That excess money was retained in the debenture allotment account. It is now used in the allotment stage. The annotations are displayed to emphasize the distinct sequence of events in the application stage. That is, first, application money is received into a temporary account. Subsequently, the debenture account is credited by transferring the balance lying in the temporary account to the debenture account. In all subsequent stages, first the debenture account is credited by debiting the relevant temporary account on the due date. Receipt of money is the subsequent event and is recorded accordingly by crediting the temporary account when monies are received. And so is the case with the next stage, the first call stage. Two events, a booking to debentures and then receipt of monies. The temporary account is the debenture first call account. And again, in the final call stage, two events, booking and receipt of monies. The temporary account in the final call stage is called the debenture final call account. The journal entries are the same standard entries. Temporary account, debit to debentures account on the due date. Bank account, debit to temporary account when monies are received. The temporary account is thus closed.